market's initial response to the Fed hiking interest rates has been a positive one. The question on the minds of many is whether it's the right response by investors. Hugh Johnson Economics Chairman and Chief Economist Hugh Johnson joins us now. Hugh, always great to get some time with you. And we were talking about in our earlier segment, there seems to be this collective sigh of relief on the street. The Fed did what it was supposed to do, and they're keeping it moving. Is that positive response the right one?
Well, I think that it's really hard to say. Quite frankly, I've been concerned for a long time, as you know, and I've been concerned I mentioned it on this program that the Federal Reserve is too hawkish. What their decisions and what they said in their dot plots is a little bit on the sort of hawkish side of the ledger. So I think, yes, it's nice to see a positive response from the equity markets. But at the same time, there's no question they're a little bit more aggressive than I had thought. I don't think when we get to 2022 and even halfway through 2023 that we're talking about Fed policy that's going to generate the level of interest rates, 10-year treasuries, that's going to really cause a significant decline in price earnings ratios, significant decline in stock prices, and start to get us into a recession. But it's going to be a close call. Right now, I would say we're talking correction and an ongoing bull market. We are not talking about Fed policy that's going to induce a more than a correction in a bear market that will be accompanied by a recession. I don't think that's in the cards, but believe me, it's you've got to watch it carefully.
Hey, Hugh, it's Julie here. I'm curious what you think. Hi, I'm curious what you think the outlook for consumer spending is, because here, the Fed is sort of damned if you do, damned if you don't, because with inflation running as it has been, one would think that would start to take a bite out of consumer spending. But at the same time, raising rates can do that too. So where do we end up on that front?
If you take a look at the retail sales numbers, and I guess you got to include January and February, but certainly if you look at the February numbers, Julie, you know that the February numbers were really on the soft side. Part of the reason they were on the soft side, of course, is, other than gasoline station sales, were up about 5%, the numbers were really on the soft side. And that really indicates that prices are starting to take a little bit of a cut in consumer spending. So consumer spending, especially in the absence of any sort of help from Washington, call it fiscal stimulus, is going to depend very heavily on job growth and wage gains, or job growth and income. And secondly, using up the savings that was built in 2021 as a result of fiscal stimulus. So quite frankly, there's not a lot to go on. And so keeping consumer spending going and going well is going to be a real challenge. And again, in the presence of higher prices, that's not going to be helpful to consumer spending. And also there's some other things going on. I mean, there's some tightness in the labor market, supply shortages. All that kind of stuff is really going to make it a challenge to keep consumer spending going as well as we need it to go in 2021. It's going to slow along with the economy in 2021. You hope it just doesn't slow so much that we're talking about recession.
Hugh, we're always picking your brain on strategy. What does it mean for the markets? What does it mean for the economy? But what about on a personal level? We just talked to Vince Reinhart, and he said we might get a 9% handle on CPI. Have you changed how you are out there spending and what you are doing because some of this inflation we're seeing? And we haven't seen this since the 80s.
Yeah, Vince was talking about the first half of 2022, and he was talking about the March and April numbers, if I understood him right. And I think you're going to be talking about, it's already in the pipeline, we're going to be talking about pretty high inflation numbers, consumer inflation numbers for March and for probably the month of April. But I think if you go beyond that, and this was mentioned by Powell yesterday, is that in the second half of the year, we're going to start to see those inflation numbers come down. The Fed was using a number of about 4% when we get to the fourth quarter in the personal consumption expenditure number. And that's a lot lower number. The consensus now is that we're going to come down to 4%. And then he also mentioned, this is a little bit surprising, that we're going to come down on the inflation numbers to say around 2%, let's call it 2.3% in 2023 and 2024. I've got them coming down, but I don't have them coming down that much. I have them coming down to around 3.5% in 2023. 3.5% in 24. So the inflation numbers are going to start to get better and are not going to serve as much of a challenge to consumer spending as they are going to in the first half of this year.
Some eye-popping numbers lie ahead, to be sure. Always great to get some time with you. Hugh Johnson Economics Chairman and Chief Economist Hugh Johnson. Good to see you.